Welcome to Qualified Opinions, where we test the ideas and limits, the knowns and known unknowns around freedom and order in contemporary politics and society. We invite you to listen as we engage with leading and emerging thinkers across disciplines and issues who will sharpen our thinking on the topics shaping our discourse. Today we're diving into a topic that has been getting more attention and more distortion: the independent workforce. Is it just Uber drivers or DoorDasher, or is it something much bigger and more dynamic than most policymakers seem to realize? Joining me today is my colleague, economist Liya Palagashvili, a senior research fellow at the Mercatus Center, and someone who's been doing a fantastic job busting the myth surrounding gig workers, independent contracting, and the future of work. She's written extensively about the real lives behind the statistics, the women, the parents, the entrepreneurs who rely on flexible, self-directed work and often find themselves under threat from well-meaning but misguided regulation. We'll talk about who these workers are, why the sector is growing, and what policymakers get so wrong about independent work. Welcome, Liya.
Hello. Thank you so much for having me on your show. It's a pleasure to be here.
So before we start, I kind of want us to talk a little bit about how did you get there? How did you become an economist? How did you pick the area of expertise that you picked?
Yeah, I was not planning to be an economist. I grew up in an immigrant family, and you had only two choices, which is to be a lawyer or a doctor. I guess I kind of became a doctor, just not like the one that my parents were hoping, which is a medical doctor. But I took a high school economics class, a phenomenal teacher, and he really opened up my world of economics, made me understand like how we can unpack and understand the world around us using our economic eyeglasses, or the economic way of thinking. And that was in high school. It was an AP economics class. And from then on, I couldn't stop thinking about economics. And he did a really great job of mentoring me to go into George Mason to do my undergrad, since they had such a stellar economics program. And then I came to George Mason, and of course, at George Mason, we have some of the best economic professors who then, mentored me and helped me get into where I am today. As first I got my PhD in economics, and then I was in a tenure track position as a professor of economics, and then I joined Mercatus about 4 years ago, so I could focus more on research and policy impact of my research. So that's been kind of the transition, and yeah, it's fun. I think that I think my journey just highlights the importance of really great mentors along the way, from high school to college and so forth.
And how did you become a labor economist? Is it like technically what you are as a labor economist?
Yeah, I would call myself like a labor economist. So I think the first labor issue I worked on was with Don Boudreaux on overtime regulations. It was immediately after I had finished my PhD in economics. And so that was my first exposure to kind of working on labor economics research. But what got me really interested in kind of the independent, flexible workforce of labor economics is that I had been living in New York City since 2013. And then I was living in Queens, which is far away from Manhattan. And if you ever wanted to get home from Manhattan to Queens in the evenings, because I was a grad student at NYU, I was doing my pre-doc there. It was like, sometimes it was just too long to wait for the subways. They're broken down. Things are not malfunctioning. It would take like an hour to get home, especially like late at night. And it was impossible, like absolutely impossible to get any cab, like a yellow cab, to take you from Manhattan into Queens, because they never wanted to go there, because they're like, well, you're just going to make all our money going up and down Fifth Avenue. Why would we go to Queens? And so that was kind of the reality of my life at the time. And then I saw like this drastic change of what happens when you got ride sharing in the city. So we saw like Uber and Lyft and another ride sharing company, Via, all enter New York City. And all of a sudden I could get home at night in a safe car, right?
Yeah.
And that got me I was so kind of excited about the change and just my regular lifestyle that I started becoming interested in like the flexible workforce. It's like, oh, how are they operating? What's going on? Who are these drivers? And again, that was at around the time of like 2015-ish, 2016, when I got really interested in the flexible workforce, and then more so in labor economics after that. So I think it was just kind of having that huge life change got me interested in their business model, and then from there kind of expanding into the broader questions in labor economics.
That's great. So let's talk about independent worker. Can you explain to us what is an independent worker, and why do you think this is such a promising area of research?
So independent worker, think freelancer, or I think of a typical contractor like a plumber or electrician. A music tutor is an independent worker. A seller, a designer, yes, a graphic designer at a designer, a seller on Etsy making and selling pottery. That's an independent worker. A driver in the gig economy, or even like a more traditional independent contractor driver, like a truck driver or a taxi driver. And by the way, in modern times, but in our times right now, it's the Substackers or the YouTube influencers. Those are all independent workers. These are people who are making either their primary or secondary source of income outside of the traditional W-2 employee-employer relationship. And I was asked before, on a panel, I was presenting on a panel, and I was asked, Dr. Palagashvili, what's the typical profile of an independent worker? And I responded and said, that's a trick question. There's absolutely no typical profile of an independent worker, because they span across so many different industries and skill levels and educational attainments. I mean, you have some like really, really high paying like consultants or energy consultants, right? And then you have truck drivers and then nannies and sellers on Etsy. So it's a wholly diverse kind of workforce, really.
And you said something that I think is interesting. You said primary or secondary jobs. Mm-hmm. So are you saying that basically some people can have a regular, 9-to-5 job or whatever, have a W-2 somewhere, and then also be an independent worker?
Absolutely. That independent workers who are making their secondary source of income through these job arrangements they're actually the largest fraction of the independent workforce right now. So they tend to be in, so think of your typical Uber driver or DoorDash driver, right? So those are the cases where we see them making mostly supplemental income on those platforms. So if you look at the company data and then the IRS data on this as well, and any other data source on traditional kind of gig economy companies like Uber, Lyft, DoorDash, and Instacart and so forth, they tend to have workers who are, work 9 to 5 in a traditional full-time job, log off at 5 p.m., and then do some side income after work. Now, a lot of them do that to help them meet their financial needs, or they need supplementary income. Maybe they're saving for something. We have a family friend in Philadelphia. She has a regular 9 to 5 p.m. job. She was doing Uber in the evenings, not every evening because it's so flexible, right? On some evenings, she was doing Uber because she wanted to save money for her daughter to have this very, wonderful wedding in Spain, right? That she was paying for. And so she used all of her money that she made on Uber to pay for that wedding. And so we see those kind of secondary supplementary earners, especially on the gig economy platform, However, that being said, post-COVID, there was an interesting turn post-COVID. After COVID, we have seen more workers going into freelancing and independent work as their primary source of income. And so, in those jobs, they tend to be more in like professional, technical, scientific kind of sector or services. Think about like a professional freelancer who's a PR specialist or who's a research scientist and so forth. And that's where we're seeing a lot of workers who are doing it as their, primary source of income.
That's really interesting. And as a share of the workforce, are independent workers, is it something that's becoming more common?
Absolutely, especially post-COVID. So that was one of the interesting phenomenons post-COVID, is that we saw a huge uptick in freelancing, gig work, independent work after COVID. Some of the survey evidence kind of helps us understand why this is the case. So during COVID, during the pandemic, a lot of workers got a kind of taste of flexible working, maybe working from home and so forth. But then I think after the pandemic ended, or after having this like taste of flexibility, a lot of them were like, I'm just going to leave and do my own thing. And maybe as part of it was also the pandemic as a motivation to push them out in certain areas. You saw this a lot in kind of urban professionals, kind of leaving their full-time W-2, maybe high-paying jobs and becoming independent consultants. Or independent financial consultants and so forth. So post-COVID, we saw an uptick of workers doing it. I will say right now, over a third of America's workforce has engaged in some sort of independent work in 2023. That's the latest data that we have it for. That's about 63 million workers. And that encompasses both like the full-time freelancers as well as the supplemental earners. If we're trying to get a number of how many are there as doing it as their like full-time job, we get a bunch of ranges, but like at the lowest end, there are about 12 million workers. And that's about 8% of total US employment. That's from the BLS data. That's the lowest end. The higher end is from a Gallup survey showing about 45 million workers doing it as their full-time or primary job. And that equates to about 28% of the workforce. And again, the truth probably lies somewhere in the middle in these cases. So maybe somewhere between 12 million to 45 million workers are using independent work as their primary source of income. And the reason we get this huge disparity is because there's a debate about who to include as part of this workforce. So it's like BLS doesn't include like the Etsy sellers, for example, because they consider that not like providing labor services. So, the range is somewhere between 12 million to 45 million workers using independent work as their primary source of income. And then we have about 63 million workers who are doing it as either full-time or as supplemental income.
So it's like it's roughly a third of the labor force. And it's grown from where? From how much?
Let's start.
I remember there was a time where kind of like the idea, you kind of have threshold like ideas of like in your mind. I have a vague memory that independent contractors were like roughly 10% of the economy. Is that a wrong kind of?
That was the case under the BLS data about 10 years ago. Yes.
Yeah. So it's grown significantly.
It has grown significantly, but I will say the greatest growth we've seen is actually since 1997, 2001. So everybody thinks that independent workers grew because of the platform economy, so Uber and Lyft and so forth. But when we look at the data, like IRS tax data, as well as the Census Bureau's data, they use what's called non-employer establishments data for this. You see the highest growth actually predating the gig economy. And if you look at the sectors where we see the highest growth, it makes sense. The sectors where we see the highest growth from the IRS tax data source, as well as from the Census Bureau, are industries like professional, scientific, and technical services, or professional and business services, or healthcare services.
So are these consultants basically people kind of setting up their like small one-person company and basically providing services to bigger groups?
Yeah, absolutely. It could be like freelance writers or freelance graphic designer. Or I talked to a freelancer 2 weeks ago. She set up her own one-person shop company, being a marketing specialist, right? And so she works with many different companies and she provides marketing specialists to that company. And I asked her, why did you decide to do this? And she says, I make so much more money doing this. And I get to work whatever hours I want and have flexibility in how I work. I get to choose my own projects. And she was previously worked as an employee and then decided to start her own like one-person business shop doing this. So she doesn't have any employees. she's technically an independent worker, freelancer, doesn't subcontract with anyone else, but, set up this sort of as her own independent business. And she provides marketing specialist. She's a marketing specialist and provides these services to many different companies that she works with at any given moment. And she will say, by the way, she'll say, sometimes, I'll choose not to take on large projects because I've done a lot already in that year. And so I might take like a month or two off of not working on big projects. Maybe I'll take like minor projects or things like that. But really kind of talking to these freelancers helps you understand their thinking through some of this stuff, because there is this idea that like freelancing and independent work is unstable or unsteady income. And, that's definitely there. But it's not like these people are thinking through that, right? So they're like, oh, I've done a lot of work. I can kind of take time off, or, I know that this contract is ending soon. I'm going to be out of work. I need to spend more time finding new clients and so forth. And that's kind of, that's one of the downsides that you'll see in surveys from freelancing and independent workers saying that. But at the same time, in the surveys, they talk about how they account for that too. Like they're able to think through it, try to make more clients and so forth.
Yeah. So let's talk actually about some of the misconception about the gig economy. Can we call it? I don't like calling it the gig economy because it makes it sound as if it's not serious work, or as if it's not actually a full-time occupation for some of these people. But for lack of a better word, let's talk about the misconception about independent work, right? I mean, because there's some people are saying, well, it's kind of a shame to actually think that some people need to have, a second job, or actually would be subjected to kind of a work of a job that doesn't have the certainty of a 9-to-5 job, and that you have to kind of get your own clients. That to me is a weird kind of concept, because no one has actually any certainty in their jobs because of the recession. I mean, unless you're a federal employee, and even now, what is it? So I know you wrote a piece about this, about the myth, like the misconception that people have about that type of work. Can you kind of give us like some highlights?
Yeah. So I use the gig economy language to talk about gig economy platforms like Uber, Lyft, DoorDash, whereas I talk about independent workforce as the broader workforce. Because you're right, when people say like, oh, these are gig workers, well, you're talking about this like professional freelance graphic designer who's been a graphic designer for the last 30 years. Like she's not a gig worker, right? Mm-hmm. And so I think you're right in that it kind of conveys like this is like unserious jobs, right? But that's not the case, right? Because as I mentioned, the independent workforce is really diverse. And so sometimes you get these people who are these, freelance graphic designers for the last 30 years, and that's their professional jobs, and that's what they've been doing, and they make a lot of money doing it, versus like, I'm going to pick up I'm going to open up my app after my full-time 9 to 5 p.m. job, and then make, work a couple hours this month even, or a couple hours this week. And so I tend to differentiate saying like platform workers or gig economy workers to think about to help us understand the distinction between these groups. So I'll start with like myth number 1 on the gig economy platform specifically, like Uber, Lyft, DoorDash, and Instacarts. So the first myth is, the majority of the independent workforce are gig economy workers. So that's the thing that kind of motivates a lot of the legislation and regulations for gig workers. They'll be like, oh, look at all these workers who are on Uber and Lyft and so forth. And that's the biggest myth, I would say. Of all the myths, that's the biggest myth. When we look at the IRS tax data on this, which is the best one, they actually find that workers on the gig economy platform apps, and they include 50 of the largest platforms. They don't name them, but they say 50 of the largest platforms. They found that it accounts to less than 10% of the overall independent workforce, less than 10%. So that's the first myth. The second myth is the myth 2 is the majority of gig workers are full-time earners on the app. And so we should be concerned about their access to health insurance and their access to benefits and so forth. That's not the case either. The majority of workers using online platforms are using it as a supplemental job, not a primary job. And in fact, the number 1 most important IRS study that was used and that looked at this, and I'm going to directly quote from them, they did the study looking at the 50, platforms that workers are using in these gig economy jobs. And they say, we find that the exponential growth in labor online platform economy work is driven by individuals whose primary annual income derives from traditional jobs and who supplement that income with platform mediated work. So, and if you look at the company kind of profiles as well, like I pull the company economic reports too. So if you look at Lyft, for example, 96% of drivers on Lyft work elsewhere or they're students in addition to driving. 96%. And same is true if you look at the Uber and the DoorDash and so forth. And what that does is just like kind of help us understand like who are these workers? Mm-hmm. They probably fit the profile of our family friend here who has a 9 to 5 p.m. job, and she turned on her Uber app for that 1 year where she was saving money for her daughter's wedding, and she made that supplemental income and she paid for the wedding. And that also helps us alleviate some concerns about access to health insurance and access to benefits for these, specifically for these platform and gig workers. And that brings me to myth number 3. Our myth number 3 is, most gig workers don't have access to health insurance. And again, I mean gig workers as those specifically working on these platforms. So that's myth number 3. There was a great study done by economist Jonathan Gruber. I did a study on looking at Uber. He found that the majority of Uber drivers, 77%, are insured. That means they have health insurance. Where do they get their health insurance from? Either from their full-time jobs or through their spouses. And that's the case if we look at kind of the broader, workforce, broader industry as well, not just for Uber, but for the broader industry as well.
So what I find interesting about this is like it goes back to what you were saying about the fact that actually people often who do independent work, who join the independent workforce, it's not as if they're like forced into this. Very often it's a calculation based on their family situation, their need at the moment. It's really like this idea that kind of people are just forced into this, and then somehow they're just like we should feel sorry for all of them. I mean, it just seems from all the stuff you just explained that it's a really enormous, the whole total is a big misconception about it. There's just a lot of calculation that comes in. It's not for everyone. No one is saying it's for everyone, but a lot of people decide to do this based on their own situation. And this is why I guess it is so hard to actually to describe what the typical independent worker is.
Mm-hmm. Yeah, that's exactly right. And I think, so I do think that there are some cases where in the gig economy platform or in the broader self-employment, independent work jobs where someone might lose their W-2 job, right? And they're out of work and then they're trying to find something in the meantime. So they're thrown into this independent contracting arrangement, which they don't want to be in, right? And then maybe they do that for a year or two until they find another W-2 job. So there seems to be some of that going on, but that's a minority of the cases. And that's part of my myth number 4, gets at exactly this point that you just said. So myth number 4 is, independent contractors just want to be traditional W-2 employees. That's not the case. So vast majority, 80.1%, according to the Bureau of Labor Statistics, said that, these independent workers prefer their non-traditional work arrangements over a traditional employment arrangement. And 8.3% of these independent workers said that they wanted a W-2 job. That's 8.3% of the entire workforce saying, oh yeah, I actually want a W-2 job. So that's what I'm saying. It's a minority of these cases where you might get someone who just lost their job or can't find another job opportunity and they're maybe in between jobs. So they're pushed into this independent contractor arrangement and they don't like that it's unsteady or unstable. And, I feel for them, that does happen, but it doesn't represent the majority of the workforce. According to the data and surveys we've seen, and the latest one is from the Bureau of Labor Statistics, it's 8.3% of these independent workers actually want to be W-2 employees. And 80.1% of them said that they want to keep their independent work arrangements. Now you might ask why do they want to, why do they want to keep their independent work arrangements? And many different reasons. Some of them, like we talked about with the Uber or the DoorDash or Lyft driver, is that, they have a full-time W-2 job. So they use independent work as supplementary source of income. They don't need a second W-2 job. It doesn't make sense for them. Like, why would you be like, oh, I work 9 to 5 p.m. and then like, let me take another structured, W-2 p.m. job. They view this as a side gig or a side hustle. And so they need it to be kind of flexible, and they need to be able to turn on the app and work whenever they need to, or, whenever they can. And then the other reason where you get mostly like the full-time and the freelancers is that they do it because some of the times it makes more money for them, or they do it mainly because they get full-time flexibility and work autonomy, essentially. And you get a lot of this from women who are in this workforce who said like, oh, I left my W-2 job. I'm a primary caregiver. I want to be able to like work around when the baby naps or around daycare hours or school hours, and I need more flexibility, and that's what I choose to do. We actually have a colleague whose wife is a freelance copy editor, and she's also a full-time mom. And when I've asked, why does she do this type of job? He's like, oh, because she's a full-time mom. She wants to be able to do her work. Like, her primary job is taking care of the children, and she wants to be able to schedule, independent work around that. And a normal W-2 job, like either a full-time or part-time job, doesn't usually give you that ability. And so we see a lot of women who are in this workforce precisely because because it gives them the flexibility to schedule work around primary caregiving.
So let's talk about women, actually, because that's an important subset of the labor force, and they're very well represented in the independent workforce, and in a way, it's not surprising because women have often expressed that flexibility is one of the most important feature of a job, right? So what do you know about women and independent work?
Yeah, that's the number one thing that we know about women in independent work, is that they tend to self-select into jobs that allow for greater flexibility. Whether those are W-2 jobs or independent work jobs, they always self-select into jobs that allow for greater flexibility. Claudia Golden, economist at Harvard, who won the Nobel Prize in 2023, her work was around that, right? So she found that in some types of W-2 jobs, specifically, women pay a high price for what you call the flexibility amenity. And those tend to be in jobs like in law or in finance, and those industries where it's hard to have, job flexibility because it might require, presence, in-person presence, meeting with clients and so forth. Whereas in other W-2 jobs in industry like technology, she found there's not a high price that would pay for the flexibility amenity. But anyway, so her research and basically decades and decades of research in labor economics has found that women self-select into flexible job arrangements. Now, what's fascinating about independent work, or sometimes I call independent work the flexible workforce, right? Mm-hmm. What's fascinating about independent work is that they are, by definition, flexible jobs. And I don't mean flexible jobs as in like, oh, I can ask my boss if I can come in late some days and so forth. So when we think about flexibility in terms of like the W-2 employment context, we're thinking about it like, oh, can I ask my boss if I can take off certain days or come in late or leave early and so forth? In the context of independent work, flexibility is an inherent feature of that work. And I would even call it complete work autonomy is what they have in these job arrangements. It's not just, I get to come in late or, leave late and so forth. And we see that, tax data, interestingly, in IRS tax data, this came through. The participation in independent work has grown significantly more among women than men since 2000. And in fact, the tax data also indicate that female independent workers are more likely to have children than female employees. And then I also found a recent academic study, analyzing data from the American Time Use surveys. And they show that self-employment rates are higher for women who have young children, and that self-employed female workers seem to have, indicated that they have a lot more flexibility in their work location, hours, and schedule as compared to women in traditional employment. And, the the study basically concluded that mothers with young children at home are using self-employment opportunities to spend an additional 2 hours per day with their children. And it allows these mothers to have more control over their work environment, allowing them to better manage their household while working. So crucially, like self-employment work is such an important, and independent work is such an important feature for these women who are having children. And we tend not to think about women as in these independent work sectors because we're still associating kind of independent work with the gig economy.
Yeah.
And you're like, oh, but my Uber driver, is a man usually. But again, that's the myth that was mentioning, that the majority of independent workers are not, Uber, DoorDash, Lyft, and so forth. And one study actually found that if we omit the transportation sector entirely, like forget about it in our analysis, women make up a greater share of income earners on digital platforms than do men. And they're, especially present in selling and non-transportation services, but selling, think like Etsy shop owners. So that the largest fraction of female digital earners was in selling, specifically things like Etsy and so forth. And so I think that really highlights kind of women's participation in independent work as a crucial factor in their ability to participate in the labor market, especially if they're mothers or have young children.
So let's talk about how labor laws haven't caught up with this reality. And, if the 1930s gave us the New Deal, what kind of deal are we giving independent workers in the 2020? It seems that basically a lot of the political momentum is in trying to drag our workforce back in time and try to impose labor laws that are just not fitting for at least a third of the workforce.
Yeah, that's exactly right. The old rules of the game don't fit the new world of work.
Mm-hmm.
And we're seeing the challenges of the growth of the independent workforce pop up recently, especially in the last, I would say, 5 years, where policymakers are saying, well, look at this growing independent workforce who don't have access to benefits and they're out of the purview of labor regulations and so forth. And as a result, there have been two types of policy solutions that have been proposed. One of them is we call reclassification policies or worker reclassification policies. So the idea there is, and it's pushed a lot by kind of progressive left mostly, the idea there is let's try to change the laws to force many of these workers to have to be reclassified as employees. And now the way that you could do this in theory is by changing the worker classification determinations to make it much more difficult for workers to be independent contractors legally. That might force companies to say, well, I can't, hire this freelance graphic designer under the existing law. Let me bring her in as a full-time or a part-time W-2 employee. That's the motivation basically. And the public justification is, we're fighting misclassification. And the question is, well, were they really misclassified to begin with, right? So there's a little bit of debate about who's really misclassified. There are, of course, a minority of independent contractor workers who are actually misclassified, but that tends to be less than 10% of the workforce. And they tend to be in very specific industries, two main industries where there's key misclassifications. Everywhere else, and across the vast majority of the independent workforce, they're not misclassified. So these sort of regulations, the best example of this is California AB 5, California's Assembly Bill 5.
Yeah.
It introduced this strict test, it codified it into law of the ABC test, plus kind of the California version of the ABC test made it the strictest law in the entire country on what it means to be an independent worker and freelancer. Now, immediate backlash to this, obviously, because it destroyed, would have destroyed whole industries if they didn't carve out exemptions, but it didn't carve out musicians, for example. And all the musicians were like, hold on, we're freelancers. We can't freelance under this law. Same thing with writers and translators and so forth. So it got a huge public backlash.
Mm-hmm.
California ended up having to exempt over 110 industries and occupations from the regulation. And again, that's partly because it was just not possible to operate as a freelancer under their new law, because they made it so restrictive that it would have forced companies to either hire them as full-time W-2 or part-time W-2 employees, or just say, like, we're not going to work with California-based freelancers.
That was the goal, right?
Yeah. It was the goal is try to reclassify them as, try to force companies to bring them in-house. Now, that might make sense for some, in some cases, right? Like maybe you were clearly working with an independent contractor on a full-time basis, and they could have easily been transferred as a W-2 employee. But again, that's not the majority of the cases. Most of these cases are like, oh, I'm a freelance writer and I work with 30 different magazines, and now this magazine can't contract with me. So what is this magazine going to do? It's going to contract with a non-California based writer. That's it. That was what happened. And we actually at Mercatus took on the first empirical assessment of AB5, because we saw kind of the anecdotal evidence come out, and it was, from New York Times, LA Times. LA Times had this heartbreaking profile of all the creative freelancers, right? So the opera singers, the dancers, all of those kind of the creative group of freelancers, right? Who always tend to be freelancers. They wrote a heartbreaking profile of like what it did to their jobs and what it did to their work opportunities in California. So we saw all the anecdotal evidence, and we're like, let's empirically test this. And so what we found was that post AB5 in California, self-employment fell. And it fell by 10% on average for affected occupations. But in some occupations where there was a high percentage of self-employed workers, it fell up to 30%. It's like self-employment fell by almost 30% for some occupations. Now, you might think, okay, well, maybe we get those workers as full-time or part-time W-2 employees. And that's not the case. Our study found that W-2 employment did not increase for those affected occupations. So essentially, you wiped out these freelancers and their self-employment opportunities without giving them like W-2 jobs in California. And so that's kind of the reality of these worker reclassification laws. We actually have a secondary study where we looked at every state that has passed kind of a similar test, what's called the ABC test. They're strict versions of a independent contractor rule. And we found similar effects where self-employment falls, and we actually found that W-2 employment falls in states that pass the ABC test as well. So that's the first type of policies that are being proposed, these worker reclassification policies, but they're counterproductive, they backfire, and they tend to harm the workers who they're trying to help. The second type of policy idea is to think about portable or flexible benefit solutions. So what do I mean by that? So in general, portable benefits are benefits that stay with the worker and they travel with the worker rather than the benefits account or the health insurance being connected to an employer. Now, this really matters for independent workers because they usually don't have one employer that they're working with at any given time. They might work with 15 different clients, and on a project by project basis, maybe one client stays with them for 6 months and then they move on to the next project. And so having a benefits system where benefits are tied to an employer doesn't make sense for them. And that's what we mean by portable and flexible benefits. Benefits move with the worker. It would be like you having an individual bank account that stays with you. And then maybe different clients that you work with can make contributions into that bank account. That's what we mean by portable benefits. Now, this is an innovative policy solution because it allows for the worker to want to stay in their work arrangements as independent workers, but still have access to some benefits. Of course, they're not going to have the full slew of benefits that a typical or traditional W-2 employees have, but it's a start, right? It's a way to think about. It's a way to make independent work jobs a little bit more accessible and open to having access to benefits.
Well, so what is stopping this from happening?
Yeah, so right now, under existing law, if you hired a graphic designer and you wanted to make, contributions to her health premiums, or maybe just provide some additional contributions to a retirement account on her behalf, or provide any sort of benefits to a freelancer, you wouldn't be allowed to do so. Because if you provide any contributions or benefits to a freelancer, the regulators will look at that and say, oh, you gave benefits to a freelancer. They look like a W-2 employee. Let me reclassify them as a W-2 employee.
Yeah.
It's a huge risk to organizations and companies. And they have to pay back wages and fines, penalties, and so forth. So no company would ever do this. And I've actually interviewed general counsel of various different companies, and they all say the same thing. We advise the company not to provide any benefits or anything that would be misconstrued as benefits to independent workers. So this is a legal barrier from allowing voluntary access to benefits for independent workers. In theory, they should be allowed to, hold these portal benefits accounts, open them, make their own contributions to those accounts, and allow for others to make contributions into those accounts. And that means from clients and different organizations and so forth. But the law prevents them from being able to do so. And so we've been educating policymakers about this issue. I have put out so many different portal benefits policy guides for federal policymakers and state policymakers about how to make reforms to remove these legal barriers and legalize access to benefits for independent workers.
And you know what's interesting to me when I hear this, and obviously I agree with you, but I actually think that the work provision of benefits is actually a big problem. We should free all workers from that constraints, because effectively people don't realize that the growth in fringe benefits and these benefits provided by works are actually a big impediment to wage growth in the U.S. And I wonder whether there's a chance that if the fight for portable benefits for independent work succeeds, if there's ever a chance that we're going to start realizing that it wouldn't be a bad thing for everyone to be getting their benefits in a portable way, where you don't derive most of your benefits from your job.
Yeah, I think so. That's a thing that many economists have been proposing for decades. I mean, even like economist Jonathan Gruber at MIT, right, has been saying that tying benefits to employment is like the single biggest source of labor market distortions and reduced labor market mobility and the causes of many problems in our labor markets today. And so I do think that in kind of the modern era, and both for traditional W-2 employees, but also for kind of the future of flexible work, we do need to reimagine and rethink benefits being tied to a traditional job. And that really, I think, is the next kind of frontier and the next future we need to be thinking through. And it can be done in maybe sensible ways. I think sometimes I've heard, by the way, proposals that like universal basic income, if you remove every other benefit and so forth. I think Charles Murray and others have made this argument. If we remove any other all the other benefits, reduce the labor market distortions of benefits on employment and so forth, and replace it with universal basic income in some way, maybe that's the way to kind of replace the safety net so that it reduces some of the labor market distortions. But anyway, I do think it's something that we need to think through for the next several decades about how can we move away from a system of benefits being tied to employment.
Yes. It seems important. And especially because ultimately what it would be is like it would restore a real market in benefits in a way, right? I mean, there was a time where, unemployment benefits, this was a service that was provided. It wasn't, obviously the government stepped in and took in a lot of these functions, but I think kind of the more we can get away from these, from this model, the better it would be. So let's talk a little bit about special interest. Who, in your opinions, are actually the biggest driver of the opposition towards independent workers and portable benefits?
I will say we're gaining a lot of momentum on portable benefit solutions from both Republicans and Democrats, and especially like moderate Democrats. There's been state bipartisan bills, one just passed in Alabama, for example. It's the one that was passed this week. Unanimous votes from Democrats and Republicans, everybody involved in House and Senate voted for the portable benefits bill and so forth. So you do get, this is kind of a unique opportunity for a bipartisan solution on portable benefits. However, the biggest opposition tend to be kind of more of the progressive left, I would say, and a lot of labor unions.
Yeah, I was going to ask about unions.
Yeah, so I think the labor union groups tend to not like the portable benefit solution options.
So what don't they like about it? So is it that they just they derive their power from people staying in the 20th century job model? Is that it? Is that just?
So publicly they'll say publicly they'll say that these workers should be W-2 employees. The assemblywoman who sponsored California AB 5, I mean, she's very explicit. She was like, freelancing are not good jobs. They shouldn't be these shouldn't be jobs. They should all be W-2 employees. Mm-hmm. And then she is now at the AFL-CIO union as, I think, the head there or some director role there. So their public justification is that these aren't, self-employment and independent work, independent contracting, gig work, freelancing aren't good jobs. They shouldn't exist. And there's a lot of, wage theft that goes on in these jobs because they should be paid minimum wages and under labor regulations and their overtime regulations that these workers aren't under the purview of and so forth. So that's kind of the public justification that they say is that they shouldn't be in these jobs. Now, what might be going on in the background, kind of like the public choicey explanation, is that if you're an independent worker, you can't legally unionize and you're not. So, and I'm not sure if they're thinking about that, right? So the more workers who are independent workers and part of the flexible workforce, the fewer of those workers are W-2 workers, meaning they're not going to be able to be part of the legal unions that we have in the US. And I think their business model is one where it's predicated on kind of W-2 employees and collective bargaining and benefits all coming through the union, all going through the union. And so in some sense, having kind of portable and flexible benefits entirely across the, entire economy or even universal basic income might be against their business model too, because I think they derive their value from getting those benefits through collective bargaining agreements, through unionized W-2 workforces and so forth. I think that might be kind of a public choicey explanation of what might be going on in the background, whereas our public justification is these are bad jobs and we should make them more W-2 unionized jobs.
Mm-hmm. And so you seem to be optimistic about politicians rallying to your cause?
I am optimistic because the only opposition we've seen is kind of this fringe progressive left with labor unions, but we've gotten really great reception from Democrats, moderate Democrats, as well as Republicans. And I will say the other side of the Republicans who are also a little bit against portable benefits are the new right sort of thing. So you've got the new right and the progressive left who don't like these ideas because I think they have similar visions about work being back in the 20th century model of everyone having a safe, steady W-2 job. They stay at the same company for their entire life. And that's not really what's happening in the new economy. And so there's a little bit of that nostalgia going on where we should move back to the model of the 20th century where everybody has a good paying W-2 job. They stay at their company. The company provides good benefits and wages. There's no sense of unstable income or, freelancing on the side and so forth. And so I think those are kind of the key oppositions, whereas the vast majority of others kind of in the middle, it is showing that it's truly a bipartisan, you get truly bipartisan support for these.
Yeah, that's so that's great. So states are more proactive on this front?
There are 13 bills introduced on portable benefits just so far in this legislative session. It's coming on the heels of Utah being the first state to introduce a bill that directly says, hey, you can't use the presence of benefits to determine whether a worker is an employee or independent contractor. That gives certainty and protection to companies who want to provide benefits to independent workers. After Utah passed this bill, there have been 2 pilot programs that have launched in Utah, one done by Target with delivery workers and another one by Lyft ride sharing that have just started in Utah. And it's, it's all kind of experimental right now because it's a new concept. So that's happening right now in Utah. Additionally, in Pennsylvania and Georgia, DoorDash has launched a pilot portal benefits program with Dashers, where they contribute 4% of their earnings additional, right, into a portable benefits flex account. And these workers, by the way, can use it for whatever they want because as I mentioned before in our conversation, the vast majority of these workers already have health insurance. So it doesn't make sense to be like, oh, you have to use this for healthcare premiums, right? They might already get that from their spouse or they might be covered in their W-2 job. So allowing them to kind of have this flexible benefits account gives them the choice and the opportunity to use the benefit in the way that they see best fit. And it's not just, health insurance. And I know that's what I mentioned that because everyone's like, oh, gig workers don't have health insurance. But these particular workers on platforms like DoorDash and Uber do have health insurance, right? It's the kind of professional full-time freelancers who don't have health insurance through an employer that, we should be concerned about for the health insurance front. But right now that we have these pilot programs that are happening, flex benefits accounts that allow for workers to choose and how they're going to, where these contributions should go to, which benefit. Is it retirement? Is it kind of paid time off? Is it, healthcare and so forth? And then, as I mentioned, 13 other bills have been introduced this legislative session with a similar types of bills that have said, the presence of benefit shouldn't be used to determine whether a worker is an employee or independent contractor. This week, 2 bills have passed so far in both the House and the Senate, and they're awaiting governor signatures. That's in Alabama and in Tennessee. And so, once those are signed into law, that will be the third kind of Utah type of states that have passed the portal benefits bills. And then we'll wait to see what happens in this legislative session for other bills. I will say too, at the federal level, a bill has been introduced saying the exact same thing. Representative Kevin Kiley from California has introduced a bill called the Modern Worker Security Act that says, no federal agency can use the presence of benefits to determine whether a worker is an employee or an independent contractor. And that is a huge kind of safe harbor provision for companies and workers to engage in portable benefits across the country.
Yeah, I have to plug in an episode, by the way, I did with Michael Cannon at Cato, looking at the reason, basically the reason why the healthcare system is so messed up, and looking at basically it starts with the income tax and the way we ended up treating the benefit of providing healthcare to employees, and how this is literally messed up the entire industry, and it is basically we have a tax problem, and it really has spill over like literally everywhere because it's made healthcare so dysfunctional and the provision of health insurance so complicated, and that it's spilling over, like kind of actually providing healthcare for those who are not in a structure like a big company. And so I really highly recommend that episode I did at the beginning of the year with Michael. And I think it's relevant in this context when we talk about benefits. Before we go, Liya, I want to ask you to kind of put your imagination hat on and kind of say that can you tell us in an ideal world what kind of like the 21st century labor market you'd like to see? I mean, it obviously with regard to independent workers, but the entire workforce. What's your dream? What's your dream?
I think we need to have thriving and dynamic labor markets that can respond to different shocks that we get. Global shocks, trade, technological shocks coming from AI, cultural shocks, or any of those shocks. What we really need is labor markets that are resilient. And the way that we can get labor markets that are resilient is by removing, I should say, labor market distortions, by allowing for, flexible workforce, right? Because if you get a shock in one market from something, right, we should be thinking about, okay, can that person easily transition into another job? Or Can we think about, are there any barriers that are causing these issues that are preventing the worker from being able to be resilient? Or from this labor market, why does this labor market die out, from the China shock, rather than kind of having the resilience that we need in a labor market? So I will say, kind of thinking broadly, and we want to try to think about how we can have kind of dynamic and resilient labor markets that will allow us to respond to these various shocks that are coming, around the world. And the next biggest shock is going to be AI.
Yes. And then we need a lot of flexibility for this, a lot of ability to adapt and to convert workers and to benefit from the complementarity and train people and all of this. Well, that's all the time we have now, but thank you so much. And good luck in pushing this issue. It seems so important. And I would love to have you back on to actually talk about the progress in a few months.
That would be great. I'd love to. It was great talking with you.
It's great talking with you. Thank you, Liya.
Thank you.